Hi traders. Alright, so this is an example of the Fibonacci retracement tool and the 61.8 ratio strategy that I put up in the previous video. Now, as you can see here on my screen, all 6 currency pairs that I trade were setting up for it. I've drawn lines in for 4 of them that would possibly have been ideal, and I want to talk you through what things to actually look for. So the first thing that you would do is when you see some sort of a setup like this where excuse me, where the market has established a bit of a low or a high, and then it's gone for a bit of a trend run, and then you see that the market is pulling back. What we're now looking for is where the market may potentially do a bit of a bounce back for us to be able to trade a reversal off. So here's what we're looking for. So once the market has done this, bounced off, pulled back, and this is when I started to notice somewhere around here when I turned my charts on. So what I did was I took my Fibonacci retracement tool, which is this F1 here. You hold it down at the bottom. Remember, wherever you hold it down to when you start off with is going to be the 100% mark. All right, so I'm looking to see where 61.8 would be when the market is reversing, right? So in that case, I'm going to hold my 100% tool, the Fibonacci retracement tool down the bottom for my 100% line to be down here. You hold it down, drag it all the way up till the top of this, and then you let go, and then the tool creates your ratios for you, right? Now, once I've done that with all of them, I come back to have a quick look to see where the EMA 50 line is. Remember I said in the previous video that what you're looking for is a confluence of events, right? So it's not just one thing that's going to show you that something potentially may happen here. What we're looking for is a number of things to say to you, well, this is most likely to happen. And so that's when, and this is really how you ensure that your win percentages are much, much higher. So in this case, I'm looking for a number of things. I'm looking to see where the EMA 50 line is. For those of you that do have the Bollinger Bands as well, you might want to look to see where the Bollinger Bands are, in particular the middle Bollinger. Usually what you'd find is that the EMA 50 and the middle Bollinger Band are somewhere close by. And then you look to see where the 61.8 line is. Okay, I also look to see how many candles number from, say, the 0 point line all the way down to my 61.8. I'm looking for 3 or more candles. All right. There are reasons behind that, because usually the market will move in like a number of bursts. 3 or more generally means that the market has been given sufficient time for that drastic movement to happen, and it's burning out. Also, what I might do is draw in my open lines, the daily open lines. I might also look to see where the high or the low of the previous session was, and I'd draw those lines in. And all I'm basically looking to see is where the market may reverse off. So if I'm getting confluence around the 61.8 line, I've got the 3 or more candles up there as well. Chances are that this is also coming down towards my open of the day right here. See that? Here's where the day opened today. Here's the day opened. Here's where the day opened. When we're coming closer to that, chances are that the market may slow down for me enough to be able to take the trade. Notice with the AUD USD pair here, where the day opened there, okay, going across. Look at this. Look at this behavior around the 61.8 line. So in this case, with the AUD USD currency pair on a 15-minute chart, I'm looking at the open. I'm looking at where the 61.8 fell. I'm looking to see where the EMA 50 is, right? So once the candle's broken past that, especially around the EMA 50 line, then pretty much anything's game. In this case, I probably would have waited for price action to come and hit the EMA 200 line. It just means your trade's going to be so much more secure, because what may happen is that if price pushes down somewhere here, if you're on the EMA 200 line, it's most likely going to create a bit of a wick for you. Okay, so this is another thing. This is where I'd say, okay, even though this is crossed here, just to ensure this is going to be more of a secure trade for me, I'm going to wait for price to come and hit the EMA 200. PA on the screenshot, guys, means price action. Right, so that's a couple of things that I would look for there. In this case, you could have taken the trade as soon as it hit the 61.8 line, because this has also crossed the MA50. Now, if you really wanted to be safe and secure on these trades, then you'd probably wait for price to come lower, break past the 61.8 before you actually take your entry. Okay. Now, notice how with most of them, well, couple of them in this case, where after market hit 61.8, the next candle was a green doji. If you want to be safe, you might want to consider just taking the reversal trade off that candle, because what will happen is, chances are the 61.8 line will ensure that the market does slow down. With forex, yes, it's a safer trade, but for most of us, when you're trading binary, if you were to take a call just on the open of this candle, well, the win that you have might be a very close one. Here, it'd be a very close loss. So what you could do is consider just doing the actual reversal trade off these candles here. Okay, but make sure there is a confluence of events. And for those of you that kind of just trade 2 or 3 trades a day, look at these guys. This is Euro JPY lined up, AUD JPY lined up, and AUD USD lined up. All right, these ones here, I probably would not have taken the trade. They did not come and hit my 61.8 line. Generally speaking, you might see this sort of behavior around the 50 mark as well. Again, I like to trade safer, because the whole goal, remember, is to be able to eventually trade higher amounts. You want to be able to eventually put down £1,000, euros, dollars, whatever, on a trade, win that trade, and be able to walk away. So in doing that, what you want to do is you want to practice taking your safest entries. So please mark that down, write this down as well. It's a new concept where you're looking for your safest entry, and in that case, I'm talking about adding to your criteria. So in this case, I'd say I want the EMA 50 crossed. I want it to be somewhere near my open or close. I want it to have firmly crossed the 61.8 line. If there's an EMA 200 somewhere down here, like in this case, I want it to come and hit the EMA 200 line, and you can add to that whatever you will. It's just going to help secure your trades a little bit more. Okay, so I'm going to put this up on the blog. You can download it and study this, and certainly go ahead and demo this. So with demoing, basically what I'm trying to get you to do is go do 25 demo trades of this next week. And the whole point behind it is that out of 25, if you can walk away with at least 20 or so wins, well, now you'll be more confident knowing that you know when to execute your trade, you know how many of them will potentially win, and if you do lose some of them, study them, figure out why you lost them. Chances are it might have been where fundamentals push the market down lower, or you probably would say, okay, I need to create more of a buffer in order to ensure that I win those trades, or it might just be a particular time of day. Make sure you check for news releases as well. Make sure you're not doing so much of these at session changeover. So what's the time right now? It's 3:45 right now. We're going into the possible open of Frankfurt, so watch out for that. That sort of stuff, extremely important. Remember, it's equally important where you're looking for reasons not to take the trade as it is to look for reasons to actually take the trade. This is where binary you need to be more with the game here. And in short, that's it. For those of you that are having trouble with Fibonacci, don't be scared of it all. It's just simply, holding down, dragging from a lowest point to the highest point, and vice versa. And you're allowing the tool to create ratios for you automatically. You can actually do this yourself. One of the things I used to teach people that were scared of Fibonacci is just to be able to get your crosshairs and hold down, drag all the way up till from one point to another, count or measure the number of pips, halve it, and that's your 50% line. Well, the Fib tool actually does that for you without you having to do it manually. That's all it is. Okay, so don't be scared of this. Draw them in and play around with it. What I want you guys to do with this is go ahead, go demo these. And at the same time, create your own little criteria around this. What would you look for before you actually execute a trade? All right? All right, all the best.